I am smelling like the roses. I am smelling like the roses. Hashtag crypto crash 2022. Hashtag Ethereum. Wah, wah, wah. Boom, 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 boom. Oh, I feel good today, boys. Power bills paid. I got $60 in the bank. Killing it. What's up, sons? It's Blind Rod with Son of a Tech once again, and welcome to the Crypto Mining Show, your one-stop shop for all cryptocurrency news. I go by Blind Rod on the internet and Matthew in real life. I got that 5 o'clock shadow that's been going for a few days this week. Tomorrow we have the great Ethereum hashrate migration. Make sure you're in and ready for that. We will be clicking over on my farm at 9:45 a.m. Central Time. Probably 10 a.m. is when we'll actually make the switch because we'll be starting the show. I encourage all of y'all to do it with me. And thanks to the cryptocurrency crash, profits aren't going to be that much worse, right? You're just going to take a day. We're going to take a day. Whew. There is so much going on. And I'm stressed. I'm sure everybody else is stressed as well. Don't worry, I'm feeling it too. I have to say thanks to everybody that supports the channel, because this will be something I have to lean on pretty heavy as we try to figure out how to make the farm survive through the crypto winter. And I think, yes, winter is here. Obviously, a lot of it spurred on by the crash to zero of UST that we talked about yesterday. We're going to be talking more about the crypto winter today, and it's not with intention of spreading FUD, by the way. We have to address these things when they happen. We have to talk about them. We have to try to be based in reality and determine what our moves are going to be. We have comprehensive cryptocurrency legislation pushed to 2025. And the best news, though, the non-FUD news, we have crypto winter sparks Coinbase stock crash as Bitcoin, Ethereum, and other major cryptocurrencies crater. You guys are probably aware of that. Flux has made an official announcement for Terra and Luna. Good on them. We were asking yesterday, and we have an answer. We'll get into it. And Tether loses its peg to the dollar as well. Are we in trouble? This is going to be a fun one. Then we'll get into mining profitability for the day, etc. Sorry for being late, but we're here. We're here. Be sure to share the stream out. And let's get into it after a word from today's sponsor. Today's sponsor is Crypto.com. Crypto.com is my go-to centralized exchange for liquidating my crypto assets. With their Crypto.com Visa debit card, I can load up my mined Ethereum to pay for power and other operating costs quickly while earning up to 8% cash back. In addition to the Visa debit card, there are additional fiat options, including wire transfers, to easily receive your profits. Crypto.com also offers additional services, including trading and even staking, to earn additional revenue on your investments. Join 10 million plus users buying and selling 100 plus cryptocurrencies at true cost by using my affiliate link in the description for a $25 funding bonus. Or enter referral code SOAT at sign up for the same bonus. Remember, cryptocurrency investment comes with significant risks, so do your own research. And welcome back. So first things first, there is a new miner release, just one. Yesterday we had a ton of them. And it's really just a quick performance bug kind of fix coming from Gminer version 2.93. It really only affects you if you're using full hash rate cards on Gminer. Remember, yesterday was the 100% LHR lock from them. So today, I think essentially having that lock in place affected the full hash rate GPUs. And so they had to fix a performance degradation problem on the full hash rate GPU. So if you were using Gminer, you're in a mixed rig with LHR and FHR cards, make sure you go check it out. Not really too big of a deal, just important that we always cover all miner updates, no matter how small. And that includes Team Black Miner when they're releasing updates every day. Let's get in the first one. Crypto winter is here. At least that is what we are being told. And we have a lot of craziness going on with it. Now, you guys may have seen the announcement from Coinbase yesterday, basically saying that in the case of a bankruptcy, that essentially all of the funds that are held within that entity, i.e. Coinbase, would not be returned to the users. It's basically a blatant statement that what is in Coinbase is not yours. So that needs to be very clear. As we go through these bumpy times, self-custody is going to be very important. I encourage you guys to start learning how to self-custody every single one of your cryptos. If you're going to be holding on to it and not cashing it out directly, in the winters, it's time to go ahead and move them out. This is when we start seeing exchanges fold, right? This is when we start seeing more hacking going on. This is when we start seeing things kind of start to get a little bit more Wild West, you know? And in that Wild West, you need to take your gold, throw it in a safe, and bury it in your basement. And so you're going to take your crypto, put it in a safe, and bury it in the basement until we're out of the winter, because otherwise you do risk losing your assets if they're on any public exchanges, any kind of centralized exchange, i.e. Coinbase, crypto.com, etc. Once again, also you can check out the BC Vault hardware wallet down below in the channel. That was actually sent to me by crypto.com. So glad to have them as a sponsor, as they do support self-custody. Let's go ahead and get into this though. Crypto winter sparks. Coinbase stock crashes Bitcoin, Ether, and other major cryptocurrencies crater. Shares of popular crypto brokerage Coinbase plummeted to a record low Wednesday after the firm reported a worse than expected loss, spurred by dwindling trading volumes, prompting a flurry of analysts to downgrade the stock as the price of Bitcoin, Ether, and other major cryptocurrencies plummet to nearly one-year lows. Coinbase stock plunged 26% to a record closing low of $53.72 on Wednesday, posting its worst one-day drop ever and pushing the stock down 84% from a peak in November. The same month, Bitcoin also hit its latest record high. Triggering the stock plunge, Coinbase revealed its first loss as a publicly traded company after the market closed on Tuesday, reporting a second quarter loss of $430 million compared to a $771 million profit 1 year earlier, and revenues that fell 53% to $1.2 billion. In a letter to shareholders, the firm said plunging crypto prices and volatility that began late last year directly impacted results and pushed trading volume down to $309 billion, 8% lower than last year, but that it remains as excited as ever about the future of crypto, given developments like the launch of its marketplace for non-fungible tokens, i.e. in short, NFTs. At least 7 analysts downgraded Coinbase shares or lowered the stock's price target after the earnings report, with Wedbush analyst Mosh Khatri noting the company attributed the loss to increased investments in new products despite what's emerging to be a crypto winter. Fueling uncertainty Wednesday, the price of Bitcoin briefly plummeted below $20,000, hitting its lowest point since June. It actually went below $26,000 last night, and I'll talk about that too. After the Labor Department's monthly consumer price index report showed inflation exceeded expectations despite cooling last month. Though Coinbase reiterated that volatility is part of cryptocurrency's long-term price cycles, Raymond James analyst Patrick blah, 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 told clients he suspects there is more than a bit of truth that the recent sell-off could be more serious. Quote, particularly with crypto failing to serve as an inflation hedge thus far in 2022, end quote. Now, that is something that obviously we talked about yesterday. And it is that Bitcoin isn't proving out to be this hedge against inflation. Parts of the reasons surrounding this, as you may have noticed, would be that institutional investment. Look, in a bull market, we love institutional investment. It pushes the price up even further. And this is something that seems to be good for the crypto market in general because new technologies get more money, larger funding, and are able to expand. However, that does mean you get tied to traditional finance. So it's hard to sit there and say, well, if you create something that's supposed to be against traditional finance, but then you allow all the traditional finance to come in, large institutions and so on, how much does that defeat the purpose of cryptocurrency, specifically as related to the fundamentals of Bitcoin, right? And then this is kind of what you end up seeing. You see stronger ties to the institutional money, to that sort of thing. And then when the traditional markets start to crash, crypto follows along. Then crypto also, because it is traditionally more volatile and is expected not to have the same correlation, ends up getting a lot more fearful, the market does, within crypto. And you have larger crashes than even in particular some of the traditional markets. So it's frustrating to say the least, but it is like how I see it as far as the best that I can articulate it in. We'll kind of talk about this too, because there was a tweet from Kim.com that was really interesting that I wanted to address as well. But Coinbase debuted on the public market last April after watershed year for cryptocurrencies, fueled largely by growing institutional adoption. The firm's market capitalization hit a record closing high of $76.9 billion on November 9th, just one day before Bitcoin hit its latest peak of roughly $69,000. However, recent months have proved difficult for the nascent market. Bitcoin has since collapsed more than 55% amid mounting fears over the Federal Reserve's effort to curb inflation by easing pandemic-era stimulus measures. Once worth more than $3 trillion, the cryptocurrency market now commands about $1.5 trillion in value. What to watch for? Quote, over the long term, we continue to believe that significant retail pricing pressure is a matter of when, not if, and also believe the cons of increased crypto regulation down the road will decidedly outweigh the pros, end quote, writes Shaughnessy. There we go. We did it this time. Beginning in late 2017, a wave of early regulatory crackdowns, largely targeting then booming initial coin offerings, sparked a nearly 80% crash in the cryptocurrency prices and a years-long bear market. On Tuesday, Goldman Sachs analyst Will Nance downgraded Coinbase shares, but said he still believes the stock is, quote, the blue chip way to gain exposure to the crypto native ecosystem, end quote. Other analysts were also less bearish, with Needham's John Todaro keeping a buy rating and saying he remains excited about the Coinbase's blockchain rewards and cloud subscription services. Bitcoin has tumbled 35% so far this year. I think that was a little bit more too now. While Ether, XRP, and Cardano's ADA have plummeted 39%, 47%, and 57% respectively. There's some more reading there. And like I said, I do want to pull up this tweet because I just remembered it and I thought it was interesting. It's a little bit of a tinfoil hat, I would say, because it is, Kim.com, I suppose. But I think it brings up an interesting point that we should address if it's still here. Let me see if I can find it. Not usually how I do the news show, but I didn't mean to pull this up. While I was reading that, I was thinking about this tweet, and I thought it was really interesting. There's Peter Schiff. Peter Schiff is just happy today, huh? Seems like he is. There's the one for Homie. That one's important too. The rich dad, poor dad guy. There it is. I got the tweet. Don't worry. We figured it out. Boom. So Kim.com yesterday, he had kind of a short thread. And I think it's important. He said, the world is on the brink of major economic collapse. Made in the USA. Again, when it happens, don't let the US government and their media fool you that this is because of Russia. It's not. This has been a long time coming. And it's because of excuses that the U.S. empire couldn't afford. Times will get really tough. It will be a global depression. When it happens, remember who did this to you, your corrupt politicians and their corporate paymasters. There's nobody else to blame. In foreign lands, look at leaders who chose to be U.S. puppets. It's their fault too. Here's the final one, which is interesting. He says, here's what's going to happen. Most have been in a coma induced by media lies, but with the big crash comes the awakening. You'll get the pitchforks and dismantle the corrupt system. People power will reign and corporate power will end. Crypto will be your new financial system. The reason why I thought this was interesting, and the timing of it, obviously during the crypto crash, during the economic crash, etc., that's going on right now, is that this does line up with the sovereign individual in a lot of ways. And I find it interesting that this is where a lot of people are starting to call, I guess, essentially the awakening. And then almost everybody that's discussing this type of thing is starting to say that essentially you will see crypto be the thing that ends up kind of, I suppose, surviving. I'd like to hear y'all's thoughts on it. Obviously, there's some tinfoil hat. You want to be careful with the FUD surrounding it. You don't want people to freak out all the way. I get it. Do you find validity in some of these statements when you see them from people like Kim.com? Do you think there is validity in there? Do you think the timeline is longer, shorter? Is it 5 years? Is it 10 years? Is it 30 years? Do you think it doesn't happen at all? Do you think this whole idea of the dissolving of nation states is a possibility to where we have smaller governments? What do you think? I'm curious. Now, yesterday we talked about Flux. And Flux essentially had partnered with Luna. Now, if you're not aware of what happened to Luna, you can go check out yesterday's live stream. A lot of people are blaming it also for spurring on the market crash that happened yesterday too. But Luna and Terra, which is the token for the stable coin, and a stable coin is a coin that is pegged to the US dollar, essentially had a huge crash. The stable coin, the algorithmic stable coin, proved out to not be functioning properly, and lost peg to the dollar significantly, continued to lose peg for the dollar, and they kept feeding Luna in because Luna was essentially the token that was supposed to basically add the liquidity needed to keep the peg to the dollar of Terra, which was the token. That didn't work, so they started funneling in a ton of Bitcoin. So they made basically Luna essentially, or Terra essentially, backed by Bitcoin instead of Luna, which didn't really help. And obviously the price of Terra collapsed. My question yesterday was, because we're proof of work channel and we focus on proof of work coins, we need to understand that relationship between a proof of work coin, which was Flux. Now, Flux is a proof of work coin for Web 3.0, and they have something called parallel assets. Parallel assets are basically just an asset of Flux that is wrapped and tokenized on another chain, whether that be Ethereum, Solana, ADA, whatever it may be, right? Well, they had announced a new partnership for parallel assets with Luna. And obviously with the crash of Luna, my question was, if Luna goes to zero and it's defunct, what happens to all of the parallel assets on Luna? Now, here's the deal. What they can do, and because Luna has not been fully integrated into the system, is they can delay that and decide not to deploy it as a parallel asset, and they can move that chain to a different parallel, or they can move that parallel asset to a different chain later on down the line. So yesterday or early this morning, Flux on their Reddit did announce this, and this is coming from MeanHash, which is great, but they said, official announcement regarding Flux Luna. We are all aware of the Terra Luna issues. Rest assured, the parallel assets will be evaluated many times before release. And at this time, we have a snapshot, but could change the target chain. In closing, if Terra survives, we would have to see a way forward that makes sense for us as a project. Stay safe and flux it. This won't be the first time, nor the last time we think and pivot if needed. So at this point, my understanding is that there will be a delay, potentially, and the parallel asset will be put on hold. Specifically with Luna, AVAX I think is still continuing forward, and then they did repeat or tweet in a reply that they agree, and that good news is they have about 5 more potential targets. Now, right now, Flux has 5 parallel assets with 2 that were announced, one being Terra Luna and one being AVAX. And we were expecting to start getting parallel payouts of that or parallel asset payouts of that for both nodes and mining. Unfortunately, what this does sound like to me, at least for a while, is one of those parallel assets will be held back. I think both of them have to be, since they're in the same snapshot. Maybe somebody from Flux can clarify that for me, though. I don't want to speak out of turn. It does seem like it may be adjusted. They do have other options to move to different chains. It'll be interesting to see, obviously, if Luna recovers to a certain extent, if they decide to continue with Luna. What would you think about the Flux project if they continue with Luna and Luna recovers? Do you have trust within Luna and the Terra stablecoin or not, right? The community, I'm curious on how you guys would respond to that if they do decide to continue. And then on top of that, just to be clear, that does mean your mining and node rewards will be, I guess, temporarily delayed. Like we were expecting to start getting these parallel assets paid out, which was exciting because, you know, as a miner, that is additional revenue. I think it was going to be an extra, with both of them, almost an extra 11% to your profitability, or to your revenue, not your profitability, excuse me, to your revenue when mining Flux. That's definitely cut down by 5.4% for Terra and Luna, or delayed at least for now. You are technically still earning those on a chain that could be deployed, or, you know, on a chain that will be deployed at a later date. It just means you're delayed out from getting that payout. How do you feel about that? Is there uncertainty surrounding it, etc., right? Let's talk about comprehensive cryptocurrency legislation pushed to 2025. Get some good news going, because that is always fun. This blip in the crypto markets could prove to be detrimental to Washington's timeline to wider crypto adoption. There we go. We can talk. As panic continues to ripple through the cryptocurrency markets, industry experts and investors alike worry that the latest crypto crash will further disparage the industry in the eyes of Washington policymakers. Following a roller coaster 72 hours when $409 billion worth of the global market cap was wiped out, founder of Cardano blockchain platform Charles Hoskinson hosted a live Twitter Spaces call for his 911,000 and counting followers, where he discussed the current state of the crypto market and its implications on the industry's future. Quote, I think we'll probably be waiting until 2025 for real change to occur, end quote. Where does that come from? Does that date sound familiar? What is 2025? 2025 is the next halving of Bitcoin. Anybody that's been in the cryptocurrency market for more than a single cycle is aware of these dates and specifically their relevance. 2025 is when the mining reward of Bitcoin will be cut in half, thereby inducing an increase in price of Bitcoin, which then ripples through the rest of the cryptocurrency market. Hoskinson told Fox Business, quote, "I have zero faith in the party of Elizabeth Warren and these others that they're actually going to meaningfully influence crypto above and beyond," end quote. The conversation surrounding cryptocurrency in Washington has been largely dominated by both Elizabeth Warren, a fierce crypto critic, and Gary Gensler, head of the Securities and Exchange Commission, who has vowed to crack down on the digital asset space using a regulation by enforcement approach in an attempt to control the rapidly expanding industry. Earlier this month, the SEC announced it would nearly double its crypto enforcement team, adding 20 new positions to the crypto assets and cyber unit, bringing the total number of staff to 50. Today, Gensler doubled down on his view that most cryptocurrencies are indeed securities and need to be regulated under the pure view of the SEC. He also caused fresh waves across the industry by suggesting that cryptocurrency exchanges like Binance and Coinbase are trading against their customers, meaning they're able to obtain intel and take advantage of trades before their customers do. Elizabeth Warren has also been a staunch critic of crypto, recently stating that investing in cryptocurrencies is a risky and speculative gamble. Now, many in the crypto space fear the words of the Massachusetts senator may be starting to ring true. In the last 24 hours, Bitcoin has fallen back below the $30,000 level, down more than 50% from its all-time high of $69,000 in last November. Meanwhile, the price of the so-called stablecoin Terra USD or UST, which is designed to maintain a consistent peg to the US dollar, plummeted as low as 23 cents on Wednesday, with its sister token Luna losing around 94% of its value last week. Right now, is that Senator Kirsten Gillibrand, that's a Democrat from New York, and Cynthia Lummis, the Republican of Wyoming, are working together on bipartisan legislation that could give the crypto industry some type of regulatory clarity. Hoskinson believes that the recent volatility and overall uncertainty in the crypto market will create more support for the new law, but time is running short. And this is one thing that we once again talk about over and over and over again. They utilize the FUD, the fear. This is a time to take advantage of the opportunity of the Terra UST problem and utilize that to go ahead and put in more regulation, stricter regulation, etc. And this happens with everything in life. You can go all the way back to when I was in high school for 9/11, and they use 9/11 to implement the Patriot Act, saying that, they can take it away later, removing a ton of rights of the individuals, and then they never remove it. So once the power is obtained, they never give it back. And by they, I mean the governments, the people in charge. The thing that gets interesting about crypto is we go back to that tweet from Kim.com, which says at this point we are on the brink of economic collapse. And we get into the question of, is it even feasible for nation states, for the governments to control cryptocurrency? And that's where I kind of go, maybe not, right? Maybe someone like Kim.com saying that basically everything will collapse and the only thing left will be crypto is true. We've seen small examples of this in different countries. I remember during the last bull run, we saw this in Venezuela when the cash became worthless and everybody started shifting to, I believe it was Digibyte at the time, to basically transact with each other, because going to buy a hamburger, you needed to carry a trash bag full of the Venezuelan dollar to go ahead and purchase it, and that wasn't feasible. So people naturally moved to cryptocurrency to transact and kind of basically cut out the middleman, which was the government and the reserves for Venezuela. That could go globally, right? And there would be no way for the government to basically prevent anybody from doing this, because they're already on the brink of collapse, already collapsing, not able to manage that. And we get into, once again, those examples of the managerial class versus the skill-based class and so on. And we start to see huge amounts of money pumped into the machine into the managerial class, and the only way they can do that is by increasing inflation. So just by nature of having to build all of these regulatory bodies up, they are devaluing the currency. So they're essentially, at the end of the day, by dumping a ton of money into regulatory options surrounding crypto, devaluing the US dollar to regulate something that threatens the US dollar. It's really interesting to watch this play out. I'm not, incredibly intelligent surrounding economics or anything like this. I just am fascinated to watch it and see how it works. And it's just notes that I'm making in my head surrounding all this, right? And I'd like to hear your opinion too. Let's see. So let's close that. Sorry about that. All right. So it says, I do believe this will push the legislative branch to escalate and actually pass a law at some point, Hoskinson told Fox Business. But unless they move quickly, I don't think they have enough political time to be able to actually pass comprehensive legislation before the midterm elections. Back in March, President Biden signed an executive order asking various government agencies to weigh the pros and cons of implementing a U.S. digital dollar, also known as a CBDC, which is pegged to the country's fiat currency. The study is taking place over 6 months and involves input from both the Federal Reserve and the Treasury Department. Proponents of digital currency feel the U.S. is lagging behind in adoption, as 9 other countries, including China, have already launched their own CBDCs. Once again, just from my perspective, I'm pro-crypto, anti-CBDC. I just want to make that clear. This blip in crypto markets could prove to be detrimental to Washington's timeline to wider crypto adoption. Washington is Washington, and the gears are pretty gummed up right now, said Hoskinson. It's likely nothing will actually get done in practice outside of more enforcements and regulation until 2025 with the change of the administration. That's interesting too, because we will see the change of the administration along with the halving of Bitcoin, which will be absolutely wild. I think 2025 is going to be an incredible time. It's pretty exciting time to be alive right now too, in my opinion, to see all of this happen, right? Like right in front of our eyes, this shift into the digital age. It was expected to begin, maybe a lot earlier, but I think there were a lot of tools that were not available to us as individuals and so on. And it took a long time for that to start coming into fruition, to see these shifts start to happen before our eyes. Yes, look, like it's going to be scary. I think it's going to be hard. Obviously, days like yesterday and today, this week in general, with huge drops and so on surrounding cryptocurrency, they can be unnerving. But at the same time, remember, like this is like, there's nothing great comes out of just easy, right? Everything great comes out of something hard, struggle. And that is that this is the struggle, right? At this time, there is a shift happening, at least in my opinion. So it's fun. Crypto exchange Coinbase halts service to India due to informal pressure from central bank RBI. The NASDAQ-listed cryptocurrency exchange Coinbase has revealed that it halted operation in India a few days after launch due to informal pressure from the country's central bank, the Reserve of India, says CEO Brian Armstrong. Coinbase Global provided an update on its Indian operation during the company's earnings call Tuesday, particularly why it exited the Indian crypto market a few days after launch. Anil Gupta, vice president of investor relations at Coinbase, asked CEO Brian Armstrong, quote, "Some shareholders are curious about the recent developments in India. Can you explain the halting of UPI, Unified Payment Interface transfers there, and what impact that will have on your expansion plans in the market?" Coinbase launched in India on April 7th. Armstrong went to India for the launch. The company said at the time that users could use the UPI system to buy cryptocurrencies on the platform. However, the company disabled the UPI option a few days later. Quote, "There's a lot of interest in crypto amongst the people there in India. So we had an integration of what's called UPI. And this was a great example of just our international strategy, end quote, Armstrong said during the earnings call. He elaborated, a few days after launching, we ended up disabling UPI because of some informal pressure from the Reserve Bank of India, which is kind of the treasury equivalent there. And India is a unique market in the sense that the Supreme Court has ruled that they can't ban crypto, but there are elements in the government there, including at Reserve Bank of India, who don't seem to be as positive on it, end quote, the Coinbase boss opinioned. Armstrong noted that what the RBI is doing has been described as a shadow ban by the media. Basically, they're applying soft pressure behind the scenes to try to disable some of these payments, which might be going through UPI, he detailed. The Coinbase executive further said, quote, I guess we have a concern that they may be actually in violation of the Supreme Court ruling, which would be interesting to find out if it were to go there, end quote. He continued, but I think our preference is really just to work with them and focus on relaunching. I think there's a number of paths that we have to relaunch with other payment methods there. And that's the default path going forward, Armstrong concluded. He did say, quote, my hope is that we will be live back in India in relatively short order, along with a number of other countries where we are pursuing international expansion similarly. There we go. I can talk today. So I thought it was important to bring that up. Once again, this is a battle between banks, it appears. It'll be interesting to see how the Supreme Court there deals with that. If they are, if the Reserve is in violation of the Supreme Court ruling. I thought that was kind of interesting. Let's get the market wrap up for today too. I think right now Bitcoin's sitting at 29,000. Ethereum's back up to 1,900, which is good. We've recovered today. So I think we can continue here. All right, so the latest moves in crypto markets in context for May 12th. Good morning and welcome to the First Mover. Let's get into it. So Bitcoin briefly hits a lows of 25,200 in the early hours of Thursday morning as Tether's stablecoin USDT lost its $1 peg, continuing this week's carnage in crypto markets. Bitcoin is trading down 20% over the last 7 days and has not seen levels this low since December of 2020. USDT, the world's largest stablecoin by market capitalization, dipped to 97 cents in Asian trading hours, losing its parity with the US dollar. It hit as low as 96 cents on Coinbase. Terra's UST stablecoin also continued to flounder, hitting levels below 28 cents according to CoinDesk data. Quote, UST depegging has caused the market-wide ripple effects, said Charles Story, head of growth at Future, a crypto index platform. What we are seeing now is panic, people running for the exits and losing faith. And that is obviously something that happens here. Now, I've never been a huge fan of stablecoins. I understand their purpose as it sits right now, but I always consider stablecoins to be a part of the transition that ends up going away at the end of the day, right? So if what something like Kim.com is alluding to, like we talked about earlier in the show, comes to fruition, your need for stablecoins completely dissipates. That being said, it's important to point out the difference between Terra's UST and what USDT for Tether is, okay? Because Terra uses an algorithmic uses an algorithm based on a different currency, another cryptocurrency. Now it's Bitcoin. Before that, it was Luna, right? Yeah. So it's important to understand the difference between that algorithmic backing and what USDT is, which is a backing by the US dollar. Now, where does USD or USDT Tether have risk? Well, it has risk in the fact that it does have to have that all of that coin backed by the US dollar, and you run out of liquidity. And if trading is happening too fast, or if you essentially are overselling the USDT, then that's how you depeg. If Tether loses pegging, it's a lot more dangerous than if an algorithmic experimental stablecoin loses the peg to the dollar, just to be clear. And those are the differences. There's a little bit more faith or a lot more faith, in my opinion, as far as maintaining the peg to the US dollar in something like Tether, right? Let's continue. In traditional markets, the S&P 500 has lost over 4.5% this week. The NASDAQ composite fell to its lowest level since November of 2020, falling by more than 3%. Over the last 7 days, Bitcoin has not pushed above the $35,000 mark, according to data from Messari. Martha Reyes, head of research at Bitquant, said in an email with CoinDesk that the markets in meltdown might present an opportunity for institutional players to start building positions and push stablecoin regulation to provide more confidence. Quote, while we can't call the bottom and correlations amongst asset classes remain elevated, Bitcoin has survived corrections of 70 to 80% in the past. This may be an opportunity for institutions to build positions at better levels, end quote, said Reyes. She added the uncertainty around stablecoins is a concern and could lead to another flush out, but we may finally get the much needed regulatory framework that could be that could entice institutions in. Regulators tend to be reactive, so this may be the catalyst for greater stablecoin regulation, end quote. Bitcoin long liquidations took a beating overnight too. According to data from CoinGlass, over the last 24 hours, $430 million was liquidated. Long liquidations took up $277 million, and shorts accounted for $198 million. Quote, this is a standard event you see in conventional futures markets and is now taking its toll on the crypto markets due to the nascent asset and the lack of experienced investors using these instruments, end quote, said Hashtag's head of Europe, Laurent Kissis. According to Kissis, the fact that long liquidations are dominating the market could push the price of Bitcoin down further. $30,000 was the key support level, so $25,000 could be a resistance now that the blah, blah, blah. We're always going to be talking about these types of things. I do want to talk about like the trade analysis, resistance, that sort of stuff. Don't get too hung up on it because this is crypto and it's a lot more volatile. Stating things like tons of resistance at 28K, we could never go below it. Tons of resistance at 25K, we could never go below it. We can always go below it. There is a little bit more prediction thanks to futures and all that sort of stuff, the institutional investment and so on. But don't bet your bottom dollar on that. And the other thing, we are miners. What do miners invest in? Keep your game plan. Look, this is not financial advice, but this is my game plan. And here's the game plan from the perspective of a miner. You are investing in silicon as a miner. You are not investing or hodling cryptocurrency. You are providing infrastructure to the cryptocurrency market. Yes, we believe in cryptocurrency. We believe in it functioning, so on. But your investment as a miner, or my investment as a miner, primary focus is silicon. It's hardware. It is not holding on to crypto. If you're going to hold on to crypto and not expand your farm, when crypto goes down, you're not making any more money. You're making less money. If you're investing in silicon and continue to build up your actual farm and your hardware, you will make more. And when the market goes down, you will have a better bottom level. That is the entire idea of it. That's how you protect yourself. Now, obviously, there are things that have to be considered. And believe you me, I am looking at them all day because I may be overextended on my rent unless I can get my 800 amps in, for example. I'm having timing issues. I should be able to expand further right now, and I'm not able to expand further right now. That hurts me. Taking care of your power costs and trying to drive that price down. Lots of people move to solar. Solar's a little bit more expensive than I would be willing to do right now because that's a high initial investment, but it's not a bad idea. These are examples of things you can do. Now, I'm also hearing right now some people in chat saying that Hive OS is down. So I'm going to sign in and look. It's spinning. So let's go ahead and look at their Twitter account, because that would be helpful. This doesn't seem like the right one. Hold on. There we go. Hive on. That's right. I do not see an official announcement from Hivon, other than I believe they were supposed to be having maintenance today. Yeah, so the web interface is going to be down for about 3 hours. Right here, it was scheduled maintenance, May 12th, 3 p.m. to 9 p.m. GMT plus 3. Registration of the new users and modification of existing profiles will not be available. The web interface may also be temporarily unavailable. We recommend not to start any work on your hardware. This does not impact mining operations. So if we went to our Hivon pool, which we are going to go to anyways, and refresh, it does look like we are continuing to mine. So we're good there. Don't worry about it too much. Here was the depegging of Tether. Let's see if it came back. It has not come back. It's still a little bit below it. Almost has repegged itself. And then let's look, before we get into mining profitability, the 24-hour changes. The biggest losers, Terra USD, the graph, eCash. Well, let's find the first proof of work one. Polygon Matic's down 15%. Zilliqa down 14%, which is the first proof of work one on the top list. So Zilliqa's down. And then let's see, what else do we got in here? Monero's down 11%, which is the second furthest down. All right, let's look at the biggest pumpers. ApeCoin is up 42% to $8.80, which is pretty impressive. FTX token is up 6.5%, but Bitcoin Cash is up 6.72%. Celo is up, FEI USD, well, it lost its pegging. And Axie Infinity is up. Helium's up a little bit, and the rest are just US dollar pegs. Mining profitability, we're at 4.6 gigahash a second. Our expected earnings a day is $109 US, and that is at 0.055 ETH. Not good. Not good. Now, for yesterday, it wasn't as bad. Last night, we had some good pumps, I think. So we ended up with a payout of 0.07 Ethereum as people were liquidating. So we had a good day yesterday. We have one donation going on for 82 megahash a second. So thanks for that. And then I put my 3090s temporarily on Ergo. I might leave them there. Some of the weird things is that I am not getting any payouts. So I've actually reached out to GetBlock, because we've had 2.29 gigahash on the network for quite some time. And the problem is, I'm getting no payouts. I do have my shares showing up. I haven't personally mined any blocks. I'm not sure exactly what's going on. I do have, almost 2%. I have 1.73% of this entire pool. And if we look at blocks, right, we started mining yesterday. 5 blocks were found yesterday and 2 blocks were found today. That's 7 blocks at 63 erg, right? So 7 times 63, and then we would basically find out what 1.7% of that is, right? So that would be 441 times 0.01. Is that correct? Let's say 0.017. We should have at least 7.5 erg getting paid out. So I've reached out to GetBlock to get clarification on that. Hold off on that pool until I understand what's happening. We haven't been on for a full 24 hours. So I'm going to give it a little bit of time. It is kind of odd, very slow reporting going on there. Luck pool, we have 3 miners on there, And I think that we're doing like, yeah, 1.2 VRSC a day. So that's kind of where we're at as far as that is. Mining profitability, the RTX 3090. Let's correct the Zell hash here and calculate that out. Ethereum is at $2.59 a day after power. Woo-hoo-hoo. Cero at $1.68 a day after power. Octopus at $1.34 a day after power. And Equilibria at $1.44 a day after power. Rio at $1.42 a day after power. Ergo $1.25 a day after power. And Ravencoin $1.06 a day after power. NiceHash Zell hash is all the way down to $1.06 a day after power. And Flux is all the way down to 90 cents a day after power. All right, mining pool profits. Bitcoin is down a lot. We're still down to 230 exahash a second. I'm actually happy to see this. I'm not going to lie, because I was getting a little fearful of number go up on hash rate and difficulty and continue to go up regardless of price. And I was like, what is going on? Stop it. This is not what you're supposed to be doing, Bitcoin. Hold off. So maybe we'll see difficulty go back down, or maybe just a few people are offline and they'll get back up, but we'll see. This has been going up consistently for the whole year. So to see it kind of go down and stabilize at 230 exahash a second is kind of nice. I'm not going to lie. Let's take a look at Ethereum though. Ethereum is at 1.11 petahash a second. Huge increases here recently, obviously. And we'll have to see how much it gets affected tomorrow. This was because of the light hash rate 100% unlock. But we have the, what do we have? The Great Ethereum Migration tomorrow, 10:45 a.m. Eastern, 9:45 a.m. Central Time. We'll be doing it here live, so I can switch my rigs over. You can watch me switch my rigs over, etc. And we'll kind of go from there. I am running behind because I was hoping that I was going to have Ergo tested out as far as my flight sheets go, and it looks like I may be switching pools for Ergo in general. And I'm not really sure quite yet. I do have Ethereum Classic prepped. I have Flux prepped. I also wanted to look at like Cortex and Conflux, but I haven't really had the chance. I also have some cards that are giving me some issues. But either way, worst case, I'll just bounce off of it onto Ethereum Classic and then go from there, because that would be the easiest to do. And we'll just kind of go from there. That being said, Ethereum Classic, 26 terahash a second. It's gone down, steadily kind of going down from the 27. And we had another dip in difficulty today, so that should be not too terrible. Zilliqa, we are at 31.21 terahash a second. Now, this is a little off because of the easel.me, but it's really hard to judge Zilliqa because of the way it processes the blocks, to be fair. Let's take a look at Flux. We would expect around 2 mega solutions a second, but it's been dropping off due to, of course, the biggest price decline. The two biggest price declines, by the way, for proof of work coins that are like listed on what to mine and mineable had appeared to be Flux and Ravencoin, just to be clear. The ones that didn't get hit as hard, it was Ergo, and I forgot. I did all of this yesterday. Oh, Monero, but Monero is going to be CPU. But Monero is relevant as well. Rio didn't dump as much, but it still dumped. There you go. I know some people are looking at Aeon, i.e. Red Panda Mining, to move their hash to. Wouldn't be bad timing for that, because there was a dip in the hash rate from 389 kilosolutions a second down to 316 kilosolutions a second. Take a look at Ravencoin. Ravencoin's a little hard to read because it's all over the place, but it's also had a dip in hash rate. You can see down here. And it's at 2.61 terahash a second. And Ergo. Let's take a look at Ergo. Ergo hasn't had near as much of a change it was a dip down from maybe like 16 terahash a second down to like 15.25, somewhere around there. You can see it kind of translated over to here. So there you go. Mining pool profitability for the day. We have last 90 days Flux pool in first, mining pool up in second, F2 pool in third. Last 60 days Flux pool in first, mining pool up in second, F2 pool in third. Last 30 days Ether mine in first, mining pool up in second, crazy pool in third. Last 21 days, Ether mine in first, mining pool up in second, F2 pool in third. Last 14 days, Ether mine in first, mining pool up in second, Flex pool in third. For the last 7 days, Ether mine in first, crazy pool in second, F2 pool in third. For the last 3 days, crazy pool in first, Ether mine in second, Flex pool in third. And for the last day, crazy pool in first, Ether mine in second, Flex pool in third. For the month, if we load that up, it does look like basically you have, for the month of April, crazy pool was in first, F2 pool in second, and Flex pool was in third. That means if you mined only on there for the month, and it's based off of 100 mega hash a second. Asic miner profitability, the KD6, down to $21 a day. Once again, like, this just goes to show you guys, we always start talking about like hedging into ASICs. And when I talk about that, I want to be very, very clear on something. ASICs are incredibly dangerous to invest into, especially as you go into a bear market, but in general all the time, because their profitability initially right off the bat looks really good for a couple reasons, especially in a bull run. It looks really good because the price of the cryptocurrency is high and the miner you're getting is the newest and of course the most efficient. And if you get it right off the bat, it's going to have a competitive edge on the network. Inevitably, as more people get those ASIC miners, the difficulty on those network goes up and your profitability goes down. What you risk, of course, at the end of the day is something that is happening to Kadena right now, which is the price is going down with the rest of the crypto market. And now you have a $60,000 to $70,000 machine that's only making you $20 a day. It's dangerous, and it only has that one coin in this particular case, so it can't really bob and weave to other coins, right? And so you end up just having a $60,000 to $70,000 brick that could have bought you a nice truck, of course, or a ton of GPUs. Now, GPU mining, a lot of people saying is going to die because of Ethereum, but at least with crypto mining on GPUs, that's not necessarily true. Look at all of these things you can shift to. Lots of stuff to shift to. And in general, yeah, they're not going to be the Ethereum, the number 2 slot, but you still have the capability to have your investment not completely go to ROI keeps getting pushed out further and further, and you're in trouble and you end up with a brick. And this happened with like the L3 pluses on the last bear market, right? And so you see this all the time. What do I suggest for like ASIC miners? Personally, not financial advice. I lean towards Bitcoin. Why would I lean towards Bitcoin? The margins are low. It doesn't look as attractive. Right now, it's only making $4 to $5 a day for a $10,000 machine. Hopefully those prices come down. I think they have come down to about 8,000. And they'll come down further. That being said, why would you lean towards that? Well, at least you have 140 years to for block rewards. And Bitcoin mining is not going to go anywhere because you have the protection of the miners voting in their own interest to continue to mine it. You have a little bit more protection there. You also have other SHA-256 coins, Bitcoin Cash, whatever. I don't believe in it, but you do have other coins that are there. And you have the Big Daddy. Your margins are lower, but you have a longer time to mine and it's a little bit more stable. With these new projects, there's a lot more risk there. Some older projects, maybe, right? Script miners like the L3 Plus, like the L7, they'll tend to come back primarily because Litecoin's been around a long time, Dogecoin's been around a long time, and a lot of people start new coins based on the script algorithm. So you have a little bit more bob and weave there as well. The ones like I just don't think you want to hop into are the brand new coins, like things like Kadena, right? Because you have a lot more risk there. And that's kind of how I see it. I'd like to hear your thoughts and opinions on it though, as well. The L7 is down to $20 a day. And I believe, like I said, the S19 Pro was last night at $4 a day. We were back up to like $7.50 a day. So luckily there's that. Digibyte's also an interesting one to talk about on SHA 256 too, because remember we talked about in the beginning of the show what happened to the Venezuelan dollar, and then obviously what did they move into? They moved into Digibyte. It was interesting that they moved into Digibyte over other stuff. But as opposed to like moving to Bitcoin, I think it was just because it's easier to calculate out Digibyte, but as you get whole coins. Digibyte's an interesting one though. Now on BT miners, we saw, some price corrections yesterday. There are no more today. Let me refresh just to make sure they haven't updated this before I speak out of turn. But we're really not seeing Asic miners come down in price all the way yet. Well, I take that back. We do have the S19J Pro now going under $8,000. It's at $7,800 for the 100 terahash model. So there is that to look at. S19J Pro with the 104 terahash model down to 8,000. I believe the S19 Pro is at 8,600 still. It doesn't go down from yesterday either. So yes, Hivon's down. You'll be okay. You're still mining. If you're not too, here's the deal. If you have a rig that's giving you trouble, Hive's down right now, don't be scared. Take the time to experiment. RaveOS is a great option. You can watch my video on how to install that, as well as Simple Mining OS, which is a great option. I've heard good things about MinerStat. It's one that I actually want to get on and actually try to utilize and create a how-to. I will be trying to work on that. This weekend's focus, though, as always, before we get into questions and answers, I hope to see you guys here tomorrow for the great Ethereum hash rate migration. It's pretty much perfect timing as we see profits start to dwindle on Ethereum for everyone to start experimenting with other algorithms. What is the primary goal of the first migration? Let's be clear on this. The primary goal is to see where everybody's going to move, okay? I hear a lot of people saying, well, shouldn't we do a single coin? And that is true. We do want to start doing single coins down the line. But we can get a general list of essentially where the hash rate moves and figure out which coins most people are going to be moving to. What is that going to allow us to do? That's going to allow us to schedule out the rest of the migrations and start to determine which coins most people are interested in. Let's say tomorrow we do it, we kick it off, we see, boom, Ethereum Classic was where a majority of the hash rate went. Well, okay, let's test Ethereum Classic first, 2 weeks from here. Let's say, boom, it happens, it's Ergo. Ergo gets the most hash rate. We're like, okay, Ergo, let's plan that migration next in 2 weeks from there. And then we'll go down the list and start trying to figure it out. The goal of it is A, to see if we can coordinate to do anything that's interesting, right? Because that's the big one. Are we able to coordinate and do something that's interesting as miners, right? Can we work together? Because a lot of the thing, like, I don't know about you guys, but for me, like personally, like part of the appeal to mining is it's me, it's only me. I don't have to worry about other people. So that's kind of like why I like to do that. That's why I like to do YouTube as well. I'm kind of the guy that will go sit down in the office and replace thermal pads for 7 hours straight. And that's like a good day for me. Like just kind of chilling on my own, zoning out, right? Like that's the kind of work I like to do. It's why I worked in IT too. Just sit in front of my screen, get my work done, that sort of thing. So I get it. I get the appeal, but we do have to start coordinating together because we have to be able to figure out, what's going to happen. So a lot of this is just to see if we can coordinate something. And if we can, then we're going to coordinate further. Make sure that you're in the Discord ready to go. Tomorrow, 9:45 a.m. Central Time, 10:45 a.m. Eastern. Don't worry, I'll be on time tomorrow. I have to be up early anyways for some other stuff, family life stuff. I'm going to try to coordinate some more conversation tonight. Luckily, Hive did not schedule their maintenance during the migration. Thank goodness. Thank you, Hive, for not doing that. And they're doing it the day before. So that's going to help us out a lot, I think, just in general, right? Do I think that we're going to make a huge impact on the Ethereum hash rate? No, not necessarily. I don't think so. But where will we make huge impacts potentially? It's going to be on these smaller coins. We're going to be able to see if there's a breaking point on some of these coins and if that profitability is going to dive. It should be a lot of fun, and I'm so excited to do this stuff, man. It's so cool. I want to thank everybody. We broke 500 concurrent viewers today too, which is amazing. Thank you for that too. Now let's get into questions and answers. Tag @SonOfATech turns the message orange, and it's easier for me to read. In addition to that, super chats are never required. Always appreciated, especially now in the crypto winter. I am going to try to survive the best of my ability because I want to make content about crypto mining every day. That's what I like to do, and I really want to do it, and I can only do it with y'all's help, so I appreciate all of it. I really genuinely do. It is a big deal to me, okay? It allows me to do things with my family that I never did. To give you guys a little bit of a background, just so you understand, because a lot of people, I think, don't get this from the perspective. It took me 12 years to get to the point to go full-time into YouTube. And that wasn't just YouTube. That was full-time with being able to mine and do YouTube and do consulting. I do other stuff outside of this too. So it took me 12 years to do it. It wasn't like an overnight thing. Just remember, if you're working on any of this stuff, right, you can do it. It's just going to take a lot longer than maybe you want it to, okay? In addition to that, the amount of time, I was in a black hole. I worked in IT the last 5 to 6 years of IT. I worked 50 to 80 hours a week. I would work 8 a.m. to 4 p.m., get a break. I would do migrations 3 to 4 times a week, 8 p.m. to midnight. If something went wrong, 8 p.m. to 2 a.m. wasn't out of the question. 8 p.m. to 7 a.m., I'd ask for time off, and you'd run out of time off. I couldn't go see my daughter's plays. I couldn't go see my son's t-ball games. I couldn't do that stuff. So what I do every single second, I worked on something else outside of it. That is why it's important to me, and that's why I do what I do. But it doesn't mean that I don't also enjoy what I do, to be clear. So that's kind of the story and a little bit of background on why it means a ton to me. Hawk Crypto Mining, thank you for the $4.99 super chat. Says, looks like Raven are on Reddit asking people to set up nodes to support their network. Have you heard anything? Excited for tomorrow? No, I didn't hear that they were asking for nodes. That is interesting. Do you have the Ravencoin Block Explorer up? Let's look. How many nodes do they have online right now? I don't like that one. Give me a better Explorer. Wow, they get like, there's very few transactions on Raven, huh? Yeah, there's not a ton of nodes. 1, 2, 3. I wonder why. Very few nodes on Ravencoin right now. I do not know why, though. All right. Chadwick's Racing says, as Hamatech, have you noticed on ETH you are getting more coin but less USD value? I notice I'm getting more ETH on 2 miners. Yes, that was happening because obviously people were liquidating. That's settled back out now. Like we pointed out in the revenue today or yesterday, we got paid out, 0.02 more ETH than we normally do. This is what happens with mining. So it's important to understand that especially with Ethereum, because of the messed up monetary system, monetary policy, and the fees, is that when people are buying and selling on Ethereum, essentially the rewards go up because the fees go up. So the rewards to the miners go up. So even in a downturn, or especially in a downturn, right? In a big pump and in a big dump, miners make more coin, not more USD value necessarily, but more coin. And so this is what you were experiencing yesterday as the markets were slumping and going down. is that more transactions with people trying to get out faster basically means more fees for the miner. John 4.0 says, Ask Hanvatech SNR are more guides. Fibonacci and standard deviation are more accurate way to predict. BTC hit the 65 level as well as the bottom yearly band yesterday. The bottom happened. So John is saying that the bottom happened. Hold on. Got some allergies going on today. Big Phil. Oh, we got a $20 super chat. Let me not miss it. From Brush79. Thanks for the $20 super chat. Says, longtime viewer, appreciate the dedication and insight. Yes, sir. Gary J, $10 euro. Thanks for the super chat. Says, thanks for all the hard work and research you share with us, my friend. Much appreciated. I appreciate you for the super chat, my friend. Let's get back up here. So, Big Phil says, Ask Hanvatech, I pulled my rig from Hive Pool and shut it down. Was barely making even with electricity costs based in the UK. Yeah. And, you know, I do, you know, we got to figure out probably like cost basis. I think a lot of home miners that were just starting out, they're going to shut off. This is, we've seen it before. Okay. And if you can't afford, you know, to pay the bills with the mining, you know, pay the bills that the mining is generating and cover the costs, then that makes sense. Once again, you got to reduce the power cost, right? And that is like the number one deal. And unfortunately, that's going to become more and more difficult as we move forward. So I understand that for sure. The other options that you're going to have is hosting, right? And that's one thing that I'm working on. Obviously, we're getting a ton more power coming into our new building. And if I can't fill that all out, I am trying to work on something to where I could help people out, share that power cost, right? And then we could cover rent and it helps me out and all that. Hopefully we'll figure it out. But I do think that hosting is going to be a big deal moving forward. It's just going to depend on, like, I think how you maintain control of your rigs. And then I do fear centralization surrounding hosting, because I think like Hive has some really great options where you can have like rigs and sub rigs. Basically, you can have a main account, like the hosting account, and then each individual user can have access to their cards from there. I know like ProDirect Mining forces like the same build out. I'm not sure that their power's low enough. I haven't talked to them in a little bit, but there are ideas surrounding all of that in general. Andrew says, Ask Hanvatech, I noticed that ERG payments take a long time. Each share is like 720 confirmations before it's paid out. Thanks for the insight. Papa Lip says, Ask Hanvatech, how long is the first migration going to be? It'll be 24 hours, and I think subsequent will be longer depending on the coin. For example, we know Ergo takes about 72 hours to get realized fully. Abhinchik, I think that's right. Sorry if I pronounced that wrong. Says, Ask Hanvatech, Hivon just updated its login page. Hive OS is now live. There you go. Rabid Mining, make sure you guys go follow and subscribe to Rabid Mining. Another supporter of the great Ethereum hash rate migration and a great YouTuber, albeit, you know, destroying everybody's Raptorium profits. Oh. Bill B says, Ask Hanvatech, this move will hopefully influence some devs to look at what coins are getting miner support. I think it will. It's interesting that we have Ravencoin trying to build more nodes before the great hash rate migration too. Joe Calvi says, Ask Hanvatech, hopefully Hive OS is fixed before the great hash rate migration. It was a planned, like we showed on Twitter, it was a planned maintenance. So I think they're going to be prepared for it. Vicus says, hi. Andy Simpson says, Ask Hanvatech, by the way, I remember that a few weeks back you mentioned having an interest in blogging. I'd watch that in its own playlist or on a second channel, make the revenue. Vlogging. Yeah, we do some vlogs. No, blogging, I do some technical blogs on Substack. Wes says, as Simon Tech, what do you think about exchanging some, not all crypto for gold and silver as a safety net? You can't move gold and silver. All right. So this is where things get weird right now. Okay. We're going through, in my humble opinion, not financial advice, etc., as we're going through a digital transformation. And the best thing, in my opinion, that you could do is literally memorize your seed phrase, because you'll always have it up here. And if, obviously, tinfoil hat, don't think anything is going to be crazy. But let's say you need to leave all of your stuff. You can only take a couple things. You ain't going to be hauling out of here with gold and silver on your back, right? That's not going to work. You're not going to get through customs for that. You're not going to be able to cross borders. You're not going to be able to move freely. What does crypto actually provide you there too, which is an interesting proposition, right? Cryptocurrency offers you a way to move freely and maintain your financial autonomy at the same time. It's incredible. Memorize your 12 seed phrase, dump everything else, run across the border. You still got it up here. It's just an interesting play there to think about. What do you do with gold and silver? You got to carry it around. You got to worry about people stealing it. I don't know, bro. Andre Mora says, Ask Simon Tech, what do you think will happen with Hive OS in these days? It's usually fall and crash. I'm very frustrated with it. Yeah, it has definitely been having a ton of issues. I think people need to disperse out to other operating systems and get familiar with them so that there's not as much load on Hive OS. That being said, I would prefer you guys to be on Hive OS because they have the best referral programs. SMOS doesn't really have a good one, and neither does Rave OS. It doesn't mean that their applications aren't good. It's just like from my own personal experience, I get paid more by Hive OS for the referrals. So they treat their content creators a little bit better. It's not a ton of money, but simple mining, maybe like $50 to $100 here and there. And, Hive OS, for the referrals is closer to like $300 here and there. Chadwick's Racing says, Ask Simon Tech, I feel, man, I'm going hard on this mining business. 100% of my free time is expanding my business. Mana Water OG says, Ask Simon Tech, big congrats on 500 concurrent viewers. Thank you. And you're one of them. Heck yeah. Second TL Mining says, Ask Simon Tech, what do you reckon is the migration coin for the RX 6000 series AMD cards? That's an interesting question. They do perform quite well on Flux. They're the best AMD performing cards on Flux. That being said, you have the options of Ergo. You have the options of Ethereum Classic. They aren't bad on Ravencoin either. So Ravencoin's one you could look at as well. KNDK says, Ask Simon Tech, would it be feasible for Flux to run persistent storage through nodes or otherwise compete with AWS and Azure? The problem with, now, I'm not exactly sure how they have it functioning specifically, but in traditional cloud infrastructure, it's not like you necessarily have the processing power in the same system that you have the data, right? So how would I explain this? So in a data center, when you set up your data center for a company, whatever people are renting out, you have the processing power, which are going to be your servers. There will be drives in there, usually used for something else, either like some sort of really fast storage, some SSD storage, caching type stuff like that, but low quantity, right? And then you'll have storage arrays that will be separate. So you'll have your processing power traditionally separate from your storage, right? And then you'll attach that storage to the processing power, essentially, usually like physically through cables, right? And then on the machine, it'll be like iSCSI or whatever format they decide to go through. You'll connect that and so on, as far as like from the physical standpoint, whatnot. From the cloud perspective, you'll just have like a storage blob or whatever, and then you'll connect that to your processing power. So running the storage directly on the nodes would pose a couple problems, right? The node goes down, the single machine goes down, your processing power goes down. What else goes down with it? The data, right? So you don't really want that because the redundancy is kind of bad. In addition to that, it would disincentivize people to run nodes because that's going to be additional hardware that they would have to install to run those nodes. So from that perspective, I don't think it works. The best plan, I think in general, would probably be not Flux necessarily solving persistent storage, but Flux partnering with someone that solves persistent storage. Because I think they'll function very differently. Hopefully I explained that to the best of my ability. Let's see. We have a few more super chats coming in. We got a €8.99 super chat coming from Maxim. Says, I will be moving to Texas in a few months for other work-related reasons. I have been building up a farm of a few rigs here in the UK. Will it be worthwhile to move them over and expand when I move? More than likely, yes, because your power costs are going to decrease significantly. Boy Matthew with the 30 MYR says, how much ETH hash rate do you think will dip tomorrow? First time sending, by the way, super chat. You deserve it. Thanks for the super chat. Tomorrow, you know how much I think it'll move actually? Because here's the deal. I don't think any large firms had light hash rate GPUs. So if I'm looking at calculations, just saying, right? Of what I would look at first right now if I wanted to extrapolate this and see how much would move tomorrow is, since we know that more than likely large firms, large mining firms didn't have any light hash rate GPUs, the increase of hash rate, which is 20 to 25% on Ethereum, were all small miners. Okay. So then what we have to look at is we have to determine essentially if we pull up Ethereum here, and we'll try to do a rough estimate, right? If we pull up Ethereum here, we know that we had gone up to 1.12, right? And that was from, let's see, at the low, I think we're at like 1.03 or something, but let's just extrapolate this out. The 1.07 to 1.12. Okay. So let's assume that jump is the 20 to 20, let's say 20 to 25%. We'll say 20% to be safe. Let's say that's 20% is all light hash rate GPUs. So therefore we can at least determine that all of the small miners had that 20% bump. Let's just be fair. Now this isn't perfect math and probably not accurate at all, but this is kind of like what I would try to do. So terahash wise, what is that, right? Let's see. Let's just do it this way. Petahash or hash rate conversion, just to make sure I got this right. I want to say it's like 5. Is it 5? Anyways, what we can do here is 0.05. So that would be 50 terahash. That's right. Okay. So we have 50 terahash at 20%. So we need to basically multiply that times 5. So 50 times 5 would be 250 terahash. I could say beyond a shadow of a doubt. Well, I would not beyond a shadow of a doubt. I would say that my calculation would say that we can move 250. What's that? 250 terahash tomorrow. Which would be 0.25 petahash. That's what I think. Somewhere around there. But that's very rudimentary. What time is it? 1:11. All right. Nicholas Kane says, at Son of a Tech, is it worth running a poll on the migration Discord to see what combined hash rate we have? That is in the hash rate room. Everybody has it written down, I believe. We are going to basically pull all that data and put it in an Excel spreadsheet. John 4.0 says, at Son of a Tech, how is Luna changing price with a halted blockchain? I'm not a miner, so I don't know how this is possible. Well, first of all, it's a proof of stake coin. They can do whatever they want. How are they doing it? They are doing it, last I checked or understood, is they were doing it by backing all of the Terra with Bitcoin instead of Luna. And because they're doing that and removing the tie between Terra and Luna, therefore Luna price changes. Marek says, that's Son of a Tech, can you explain to me what just happened with NanoCoin? I didn't even look at NanoCoin, so I don't know. Is there a price bump or something going on? Looks like it was a 10% dump. I don't really know. I've been live for the past hour, so I maybe missed that news. Lucas says, as Son of a Tech, Flux already works on storage nodes, and they will run on small Cumulus nodes. There will be incentive to do so. All right, cool. LZ says, as Son of a Tech, would a partnership between Flux and redesigned Chia work? No. Chia was never there to solve persistent storage. Chia is the biggest waste of hard drives and is the most wasteful cryptocurrency in existence, in my humble opinion. Because if we look at essentially the most important resource in the digital age, it is hard drives. It is data. Big data is the most useful thing, and wasting that data to put what is the equivalent of a bunch of bingo cards on it to determine if somebody wins a block reward is bullshit. It's a waste of storage and a waste of one of the most important resources we have within the digital realm. Blue Dragon Mining says, at Son of a Tech, for those still trying to expand out our small farms, what do we see as a good target price for older cards? I would stick away from the older cards because I think the newer cards are going to drop in price. It's all good. Mining says, at Son of a Tech, Luna halted things while they were releasing a new patch. It's been deployed and they're coming back online. There you go. Miner, instead of saying you skipped me, just type in the question again. Daniel Ring says, my 570 is making me more on ETC than an L3. There you go. Jorge O says, at Son of a Tech, does this Terra Luna fiasco proof that proof of work is the king against attacks? Not necessarily. All it really is a proof of is that they messed up the algorithm. Chadwick's Racing says, at Son of a Tech, BTC hosting is the reason why miners are not going offline. They are under contract to keep it powered on. You should know you have a few miners costing me money to keep online. Oh, because you sign a contract for hosting, right? Sharebox says, at Son of a Tech, what will you launch your own crypto coin? You think that any time about that? I've been working on one. It's hard. Miner says, at Son of a Tech, why OS having increased block times a bad thing? Because it slows down the network. It's just like anything else. So, so it's just, yeah. So if people are trying to transact on the network and they come in and they submit a transaction and they have to wait a long time, then what happens? People get impatient and grumpy. Andy Simpson says, ask Son of a Tech, did you end up getting that 6750 XT? Still waiting on AMD to ship mine. Not yet. No, I don't think so. Chadwick's Racing says 12-month contract at 12 cents a kilowatt hour. Yeah, and what is that right now on an Asic miner? Calculate that out. 12 cents a kilowatt hour, depending on which one you have, but like an S19 Pro, you're still in the profit on S19 Pro. When do you go negative? on the S9s. Something like that. Off-brand says best cards for Flux 20 series 2080 Ti in my humble opinion. Miner says that's having tech, but wouldn't having faster blocks make the transactions faster, not slower? Are you speaking about which way are you talking? I thought you, well, oh, hold on. Because I thought you were talking about Ethereum and them worried about the block times increasing. So if we're talking about Bitcoin and why Bitcoin keeps slower transactions is because you can use layer 2 to speed up the transactions, hence Lightning Network, right? The reason you would want to keep the slower transactions is not purely because you want to have slower transactions, but there is basically, at least from the arguments from a lot of Bitcoin maxis, is that you want to have stable, sound money, and sound money has to be not, it doesn't need to be fast. It just needs to be here centuries from now, right? So the idea for Bitcoin and the way they function around that is that for your large holdings, you're going to keep layer 1 right where it's at with the small blocks, and then the transaction times where they're at, not mess with it, leave it exactly as it is. And then for your smaller transactions, etc., you build a layer 2 on top of that to speed up the transactions. Now, if we're talking about Ethereum is trying to do all the transactional data, all the processing of the smart contracts, everything kind of within layer 1. That's part of like the merge. That's part of ETH 2.0. That's part of needing scalability, all of that. Now, in the interim, what had happened is that layer 2 solutions were built on top of Ethereum to accommodate all this stuff. And I think it should remain that way, similar to the way Bitcoin kind of perceives it, or most Bitcoin maxis perceive it. As opposed to that, Ethereum is going to try to do everything on there, so they need the faster transaction times. So it's really dependent on like basically the architecture of the specific chain and how it interacts with other chains, etc. LZ says, I agree on Chia never having a purpose, but it showed that the right rewards, miners could be able to provide a ton of storage. Could something like that work with Flux work? Yeah, and I think like there's persistent storage will eventually be solved, and there will be something like that that will function. Will Flux build that fully into their ecosystem? Probably. Is there potential for a partnership? Sure, right? I'm not smart enough to know how to solve that problem necessarily, because part of the problem that you have with decentralized storage is that that data is being, well, obviously stored somewhere. So you need redundancy, right? So when you have like, so there's a couple things with, there's multiple levels to redundancy with storage that causes a lot of issues for decentralized storage. In a traditional setup, like I was talking about, you'd have your individual storage arrays. Those storage arrays not only have basically redundancy within the single array via things called RAIDs, where you have essentially data, the same data written on multiple drives, but then that array is usually put into an array with an entire other physical box. So if that one fails, it fails over to that. And then on top of that, there's typically additional networking connections that are running through completely different pipelines. So maybe they have AT&T and Spectrum in there. So if the network connection goes down, it goes to there. It's a lot easier to manage that in a single data center than it is to manage that on the blockchain, because what do you have to do now? Now you need a lot more storage than you think. It's not like you get a 120 gigabyte hard drive, put it in, and then that's 120 gigabytes. Take that 120 gigabytes and divide it by 4 for redundancy, right? So 2 drives redundant in the system, another array for redundancy in that system, right? So then you're cutting that storage down all the way to like 25 gigabytes, right? Or 30 gigabytes. So your 120 gigabyte drive is really only 30 gigabytes, right? And now you have to solve that on the blockchain too, because that 30 gigabytes that you're providing that's been like striped and basically redundant then has to be redundant across the whole entire blockchain network. So now you have to be able to, somebody goes in, they set up, they set up their, or not their node, but they set up their VPS on Web3, right? They attach a storage to it. And now that data has to go out and be copied to multiple miners in that theory, right? Because you can't have that storage has to be able to fail over, because if this miner goes down, they're still going to need their data. You need 24/7 access. Processing power is a lot easier because it goes, oh, processing power, this CPU is not working right now. We'll just bump it over to here. We'll send the data that we need processed over there and bring it back. Done. That's all you got to do. Storage, you got just a whole bunch of extra problems surrounding it. And hopefully that makes sense. So it's a lot of data, a lot of hard drives, and the return on investment to miners, I don't think would be enough to make sense necessarily, right? I think that's where you end up also running into the problem of Web3 becoming extremely expensive. Whereas right now with Web3, with the processing on Flux, it's a lot cheaper. Hopefully that makes sense. Hawk Mining Crypto, $1.99 says, speaking of storage, have you heard of SC Prime? No, I have not yet. I'll try to add it to my list. I'm going to call it for today because we have been live for a while, I think. Yeah, 2 hours and 30 minutes. Thanks everybody for watching. Be sure to hit the like, comment, subscribe, notification bells down below. Thanks for all the support today. Hey, look, keep calm, mine on. We got this. Check out the links to the shirts down in the description because, I'll see you next Tuesday. Oh, that NB miner crashed. Yes.